Good afternoon, beautiful people. Welcome back to Young Money Investing. It's Sunday afternoon, so it's time for my weekly market prep where we use technical analysis to establish some trend and some market structure so that you can make better trading decisions and hopefully make some more money as well. Really quick, if you appreciate this content that I'm putting out for you every single week, then go down, hit that subscribe button. Very gently tap that like button right next to it. I usually say smash it, but I feel like that's a little mean, so be gentle with it. Give it a soft little tap. Show it some love. Show me some love, and let's go ahead and jump into the charts. All right, starting off on a daily time frame for the DXY, the US dollar, you can see here that we came up, we touched our 20-day moving average, rejected back off of it, and we did get a close below this very important support line at 101.629. We did come down and break it just about the same level as we did back over here at the beginning of February, and then we got another close, kind of a bullish engulfing candle here. However, unlike previously in the beginning of February, we did not close back above that support line. So are we going to see this turn into resistance? Are we going to move back up and get another rejection off of the 20-day moving average? I'm not quite sure yet, but I do think that sooner rather than later, this support line is going to break entirely, and you will see a move back down to this next support line at 99.19. So keep an eye on that. Keep an eye on that this week. If we do get a move back up to possibly the 20-day moving average, I don't quite think we'll see a move back up to the 50-day moving average, so I would keep a really close eye on this 20-day moving average, which is going to be in this area right about here. Moving on, let's jump over to the NASDAQ. NASDAQ pretty much went sideways all of last week, opened at 13,179 and closed the week at 13,181. So a 2-point difference between the open from the week and the close of the week, literally just sideways the entire week, as you can see in this highlighted area right about here. Not really strong moves either direction. I personally did not have the greatest trading week trading the NASDAQ, so this might have partly why it's kind of hard to find a good trade when price action is just going sideways and there's not really strong trend in either direction. So where do we go from here? Now, we are holding the 20-day moving average currently. We do have the 50 and the 200 below us. We are a little bit extended from the 200-day moving average. You might get a small retracement back down, maybe to about 12,756, 12,740, somewhere in that range. I'll actually draw it out here. Looks like we have right about here, somewhere in this area, we could get a small move back down to that. Other than that, I really couldn't tell you. Zooming out to the weekly time frame for just a second, we do have some areas of resistance at about 13,500, 13,600, which is about, call it 400 points above where we currently are. So we could see a move up to somewhere in that range, or we could see some type of retracement back down to the support line at about 10,700. It's kind of hard to say where it's going to go from now. I don't really have a clear answer to give you, so just kind of keep a close eye on this, keep a close eye on these moving averages, and kind of take whatever it is that the market gives you. Jumping over to the Russell 2000, very similar story, pretty much just went sideways all week. Slight direction trending up. You can see we actually have this kind of slight trend line going upwards just like this right now. So running into some resistance at about 1,800, sitting just below that at 1,796 currently. I would like to see it of this confluence of the 200 and the 50, which is going to happen probably later this week, probably maybe Tuesday or Wednesday. I would expect that convergence to happen. I would like to see price action break above that, move back up into this 1875 level, and potentially even this 1923, where we have long-term resistance. If we do get rejected off of this confluence of moving averages, I would expect price action to come back down to that support line at 1734. If we break that, then we still have that other support line at 1655 as well. But we have held this support line since October of 2022, so it's a pretty long-term support line. Has held for several months. You can see we have 1-2 really solid touches right now since we broke it back here in October. So the only mild concern that I have is we did not get a strong bounce off of it. Like you see back over here, you see price action move up, break through all three moving averages, kind of slight retracement, and then break out before eventually falling back into this zone. This is all pretty much sideways action since the last time we touched it. Is slightly concerning, but again, we're just gonna have to wait and see how this double moving average treats price action this week. Let's jump over to the Dow Jones. Dow seems to be the only index that actually had a fairly solid trending week. You can see we trended up pretty much right from Monday, moved in a bullish direction. I almost said bearish. Moved in a bullish direction, moving our way back up towards that long-term resistance line at 34,345. So I do think that we are going to see that touch. At that point, you just have to kind of wait and see what price action is going to do, if it's going to keep moving upwards, something like this, or if we do get a rejection back down to this supply zone in green that you see right here. Again, we are above all of our moving averages, quite a bullish sign, but we are a little bit extended from the 200-day moving average. Anytime price action gets too far away from that 200-day moving average, you do expect some kind of, slight to moderate retracement. You don't necessarily need to retest it per se, but you do kind of need to see some kind of consolidation closer to it. So this area right here, that 34,345 level, area of interest for me this week. I very much like to see if price action is going to break out, kind of retest it, and then move back up in a bullish direction, or if we're just going to reject back off of it. Either way, that's the zone watch. So with the indexes out of the way, let's go ahead. Let's take a look at my trade of the week. This week, we are looking at BigBear.ai Incorporated. The ticker symbol is BBAI. Let's go ahead and draw some lines, and I will be right back. All right, so as you can see, I've run out this kind of curving white line right here, and then this resistance zone, which covers about $3 up to about $3.40, about a 40-cent range there. Price action has been in a pretty strong downtrend since February of 2023, February of this year. Kind of put in a bottom, it looks like somewhere around late March, and have been slightly uptrending since then. Now, zooming in here just a little bit so you can kind of see what I'm looking at here. We have regained the 20-day moving average and the 200-day moving average, and just recently, as of the close on Friday, we regained the 50-day moving average as well. So quite bullish sentiment that we have here. What I'd like to see is a breakout of this consolidation zone. I'd like to see a retest back down, and then I'd like to see a move back up towards all-time highs back over here at about $6, 6 to 665, somewhere in that vicinity. I would like to see the breakout retest first. I'm not going to buy the first breakout. That's slightly risky. It seems like you could get burned pretty easily on that if you were to ask me. So I'm going to wait for the breakout retest, and then I'm going to buy on the retest at about $3.40. If we go ahead and put on a position here, we'll scale this up to about, call it $6, and then pretty tight stop here. Put it at about $2.90, so you're risking about 50 cents if you get in at $3.40, risking about 50 cents, looking to make about $2.60. So the risk to reward there is going to be 5.29, meaning you are looking to make $5.29 for every $1 that you're looking to risk. absolutely smashing risk to reward ratio. I generally target 2 to 3 when I'm trading. When I'm trading, I generally target maybe 3 to 4. Anything above 5 is an absolutely smashing trade in my book. So again, wait for that breakout, retest, and then buy on the retest. Stop loss is going to be just below this consolidation zone, which begins again at about $3, runs up to about $3.40. So only thing to concern is, I'll zoom this up just a little bit. The RSI is a little bit close to overbought territory. Not quite there yet, but it is about 63. So you might see it peak out before we get the retest. I'd like to see it cool off to about 50 before you see that big run up to about $6. So just some things to keep in mind. If you're using a different momentum indicator, then please pay attention to whatever signals it is giving you. This is not financial advice. I am not liable for any mistakes that you make. Please don't do anything stupid with your money. Always use a stop loss to manage your risk and do your own research. That's it for me. Thank you all so much for watching. Once again, go down, hit that subscribe button, help me out a little bit. I'm trying to grow this channel. I would really appreciate if you'd show me a little bit of love. So, that's it. Take it easy. I hope you guys smash your trading goals this week and you make a bucket load of money. Peace out, homies.